Hey everyone, welcome into today's video, and we have some great news for any Zeta shareholders. I'm personally a long-term shareholder of Zeta. It's my second largest position, and as you can see on screen right here, Palantir and Zeta just announced a strategic partnership together, which is great and kind of funny because I used to always compare how when I was researching Zeta before I started building my position, the company reminded me so much of when I was researching Palantir back in like a 2022-ish time frame. And now they're partnering together. So I think this is extremely bullish for the company, the stock as well, and just the long-term prospects. But I want to go ahead and read through this press release. Then we're going to go ahead and touch on some of the points the CEO made in this fireside chat they had. I have some timestamps for this we can go over. We're going to go over a bit of the valuation. Then after that, I'll go ahead and let y'all know what my plans are with the stock going forward and what moves I did make based on this. So let's go ahead and start here with the press release. I'll go ahead and read through this and then give my thoughts right after. So Zeta Global, the AR marketing cloud, and Palantir Technologies, a global leader in artificial intelligence and data platforms, today announced a strategic partnership to build the enterprise AI infrastructure layer that connects operational intelligence, customer intelligence, and marketing execution. Together, Palantir and Zeta are combining AI infrastructure with Zeta's intelligent decisioning and trusted data to bring a new standard of data-driven agentic marketing for the enterprise, or to the enterprise. Marketing is the front lines of the AI revolution. The enterprise that will lead are the ones whose marketing infrastructure is built to operate in real time with data they can trust and AI that can act. The partnership pairs two complementary platforms and deep technical integration. Palantir's Foundry brings the ontology, governance, and operational infrastructure that enterprise data demands. Zeta's data cloud will be re-architectured on Foundry with Athena by Zeta. Zeta's AI-powered intelligence layer, turning that data into decisions and measurable outcomes at enterprise scale. So right here, what I want to focus on is first off, the fact that the platforms are complementary kind of really gives more stock to how good Zeta is and how good their network is. And then also the fact that this is re-architectured on Foundry, which the CEO will touch on during that interview, but this is going to be great just for the actual efficiency and speed that Athena is running at. But let's continue. Palantir and Zeta are using ontology to create next generation marketing environment, giving Zeta all the advantages of AI while protecting against many of the known dangers, said Alex Karp, CEO of Palantir. Bringing together containerized architecture and AI in the context of marketing will transform the industry. That's big coming from Alex Karp. That's something big to hear. But anyways, Palantir has built the infrastructure the world's most sophisticated institutions run on, and Zeta has built the intelligence infrastructure that powers how enterprises acquire, grow, and retain customers. Together, we are bringing AI-powered marketing to these same organizations on a platform they already trust, said David Steinberg, the CEO of Zeta. The next generation of enterprise value creation will come from connecting operational intelligence with customer intelligence. We believe the partnership can drive more than $100 million in annual revenue to Zeta in the coming years and help define what winning looks like in the agentic era. $100 million is very nice, should be great for revenue, but I don't even think that's the most important part of this, which I'll explain in a sec. Next, Athena is becoming the operating system for agentic marketing, the intelligence layer where opportunities, decisions, and outcomes converge. With Zeta's data cloud re-architectured on Foundry, Athena will be able to draw on richer, more expansive enterprise data and act on it in real time, giving marketers the precision, speed, and accountability the agentic era demands. For large enterprises where data trust is non-negotiable, both Palantir and Zeta operate the security, governance, and compliance standards their businesses are built on. Palantir will provide the software infrastructure to support Zeta as it brings a marketing intelligence to the Foundry's eligible enterprise customers. With Zeta's data cloud re-architectured on Foundry, customers will have a trusted path for governed enterprise data to real-time decisions and measurable marketing outcomes powered by Zeta's data, AI infrastructure, and decision-making intelligence. Okay, first thoughts on this. I think it's extremely bullish for Zeta for a few key reasons. The first one alone is just working with Palantir already brings another level of credibility to the company. Now if there's any enterprises that might have been on the fence where they were maybe thinking, but they've been with some legacy providers, maybe a Salesforce, for example, and they were on the fence about do I really want to go do marketing with this smaller company? Remember, Zeta is like a less than $5 billion market cap as of today. They're a smaller player in this. But the fact that they're working with Palantir, such a well-respected company that's also tied in with so many enterprises because that foundry is more enterprise software, they are going to look at that and go, okay, if it's good enough for Palantir, one of the highest quality companies in the world, to run with it, then we might as well check and see how it goes. And we know with Zeta, their product is so sticky that all they have to do is get that enterprise in the door, and it's going to be so accretive to their revenue in the coming years because they're able to charge more and more year after year as they build them out for more use cases. Remember, Zeta right now has a net revenue retention of 120%. What that means is a company spending, let's say, for example, $100 with them, a year from now will be spending $120. Obviously, these numbers are looking more in the hundreds of thousands of millions, but that's just for simplicity and example's sake. And there are not very many companies with that net revenue retention over 100%. There's very few. And one of the few, and I think actually the number one in the world, is this one right here, Palantir. With, I think last I checked, they're like in the 130s to 140 range. Which this is a little off topic, but Palantir's also been looking like a great deal. The stock's nearing back to 100, and with the growth rates they're showing, I think their forward PE is sitting at like a 60. Really not looking bad. And I actually had a pretty decent size position in Palantir. I've since then sold most of my shares, but at the height I had around 170-ish before I started selling out as it went through its run so I could reallocate. But I would not be opposed to potentially also adding Palantir back if the stock price continues to be depressed. But that's something for another video. I just wanted to point it out. I just thought it was funny because I always, when I was researching Zeta, looked at it. I'm like, oh, this reminds me of Palantir, and now they're partnering together. So it's great. So that was the first point I just kind of covered, where the credibility is going to be great. Second one, when you're layering Foundry on top of Zeta software, that's just going to drive efficiency, which David Steinberg's going to touch on this call in some of the clips I pulled up. But the main thing with that is just the way Foundry works. They're going to be able to reduce their expenses, which is just going to be accretive to margins. And especially with the company switching over to GAAP profitability this year, should be expected to, which I think they will, and I think they'll blow that out of the water. Then that's just going to farther accelerate that revenue growth. So maybe we'll see this revenue still stay 40, 50%, but you could see that net income going up 80, 90, 100%. And just on the back of just margins improving very rapidly. Next thing that also is going to help is something he touches on as well, is because they're running it with Palantir, it's actually improving the speed at which Athena can kind of analyze the data within the Zeta marketing platform. And it can help, doing this is actually helping driving meaningful growth to return on ad spend. So David Steinberg's always talked about how he wants his return on ad spend to be above 1,000% growth. And anything he's able to grow above 1,000%, they're planning to take to margin. Right now, their average return on ad spend ranges from the 600 to 700% range. He does go through an example in this interview where they have a real actual customer they deal with where they had a 1,400%. So there's already some customers above that 1,000% target. He's just trying to get the average up to 1,000. And from the sounds of it, this is going to drive that even farther. So those are some of the points that I think are very, very bullish, but let's go ahead and watch some of the commentary from the CEO. I'm going to give my thoughts on that. Then we can move on a bit to valuation and what I decided to do with my position. So let's go ahead and start off. First clip's going to be around 3-ish minutes, if I remember correctly.
That's spent. And everything we do as a company is to try to get there. A few months ago, we launched Athena, which is our voice-enabled super agent. If you think about enterprise software, and not just us, any enterprise software company. I always make the joke about the Bloomberg terminal. What percentage of your Bloomberg terminal's features and functions do you use on a regular basis? The vast majority of enterprise software, people use between 5 and 10% of capabilities. Athena, you're no longer navigating a complex platform. You're going to Athena and simply saying, I would like to create 2 million incremental customers this quarter, and I'd like to do it by lowering my average expense by about 7%. Athena will then access every feature, every function, and every data set to come up with the best possible outcome. It'll then change the user interface to show you the results. You can then say to Athena, amazing, that's a little big for me. I don't want to start with that. I'd like to do a test. Can you activate the test? And every hour send me an email so I can keep track of the return on marketing spend per hour. When you look at taking the Zeta Data Cloud and Athena and putting her on top of Foundry, which is Palantir's platform, it's going to massively speed her up. That speed, every time we can remove incremental latency, we can return substantially higher return on marketing spend. And also the credibility that comes from partnering with Palantir and going to market, we think is going to be a game changer for us as a company. David, talk to us.
So right there, David Steinberg just kind of reiterated the points that I was making earlier. So as you can see right there from what he was explaining, he believes with that layered on top, with Athena being layered with Foundry, it's going to actually drive up return on ad spend and kind of increase the speed of interpretation of this data. So that's already big there. And of course, the credibility. So I just wanted to touch on that, show that the CEO was bringing that up as well, which I think makes sense. Next point we're going to go on is over here around 620. Also, I did take down a note for this. Just a heads up, this deal with Palantir is currently signed in for 7 years. And the other thing I have listed here is they said it should be going live by the end of Q3 as well. So just something to keep in mind as a shareholder.
Clients is we can help you meaningfully lower your cost and be more efficient with your business. Zeta is the best platform in the world for managing and lowering marketing and CRM expense. We're usually able to lower our clients' expenses anywhere from 50 to 75% on marketing or CRM expense. I don't know if you saw yesterday, Ron, but Gap announced they were throwing 4 vendors out and replacing all 4 with Zeta as the system of record for Gap. That's the type of deals that we're winning at this point. And you put Foundry underneath it, it's game changing. One of the interesting things about the Gap deal was we had bid the Gap RFP 3 times and come in second 3 times. And I was like, do we really need to waste our time with this again? And I ended up getting introduced to their CEO, and I said, listen, we're probably not going to bid it this year. You guys seem great, but they've been with Salesforce. I mean, they were a Salesforce shop forever. And he said, bid it. Just bid it. We came in, we bid the RFP. Halfway through the RFP, Athena became generally available. So we went in and we did a full demo in the middle of the RFP process of Athena, the voice agent. And the next day, they asked us for pricing. So, you start to look at Athena and where she's going in the marketplace in partnership with Palantir and where they are in the marketplace. This will be our 4th year of greater than 30% compounded organic top-line growth and greater than 50% compounded organic EBITDA growth. And I think that Athena, in partnership with Palantir, is going to make us a 20+% organic grower for many, many years to come.
Okay, big point right there. First thing, they stole Gap, which this was already hinted at on the conference call, but they did steal Gap from Salesforce. Now, funny enough, Salesforce was actually a company I've had a starter position in, which we'll go more into that when I get to the moves I made. But just from that, it's very bullish because you can see they're starting to take market share away from some of these legacy players in this industry, which is going to be great because taking away some of these legacy players is going to be how they start doing the actual disruption and start acquiring a lot of that marketing spend. So this is going to be really strong. And as they continue to take more and more, remember, that's not where the revenue growth stops. The beautiful thing with this company is because of that high net revenue retention we were talking about, that is likely going to increase with this deal. So going from 120, maybe 125%, 130% potentially, maybe in that area, is that when they acquire a new customer, you're getting obviously that increase in revenue from just that initial acquisition. But now every year going forward, you're making like 20% more of that customer. Maybe they spend a little more. Now it's 25% the following year. And it goes up and up and up. So you're getting that revenue growth from customers that aren't even leaving you. So you don't even have to go out and acquire new customers, and you're still getting very strong revenue growth. But of course, they are acquiring new customers as well. So that's when you kind of get what they always mention with this flywheel world, where it just kind of accelerates and accelerates on top of itself. And that's how you can get the company to put up these insane growth rates quarter in and quarter out. 19 consecutive beat and raise quarters. Now, other thing I want to touch on right here. He was just mentioning that he believes with Foundry and Athena tied to, he can continue growing organic revenue growth by 20% for years and years to go into the future, for as far out decades, we could say. And I personally think he's sandbagging this because this company always sandbags. Like I said, 19 quarters straight beat and raises. So one thing they know how to do is under promise, over deliver, which is great when you're dealing with a company that does that, because you can be very confident in their projections because you know these projections are likely lower, which is why I was so confident in the projections I was running when I had it very close to those 2028 projections, even though knowing I'm like they're probably going to blow these out of the water. Those 2028 projections were so conservative. I think they didn't even factor in any Marigold growth, just Marigold revenue basically staying flat in those expectations. So they're always very conservative, and they still come in and smash those numbers. And another thing is 20%, that's organic revenue growth. That's not even factoring in other acquisitions, which they know they do. Like for example, this last quarter, the revenue growth was 50%. 28% of that was organic. The rest was from that acquisition. So they're growing 28%. I could see where their organic is 23, 24. And then what does that mean for their total revenue growth? Because I'm sure that's not the last acquisition they're going to do. They're more than likely going to acquire more in the future. So their total revenue growth could be so much more substantial. But let's go ahead and hit the next part, which is about 10:30-ish, around there.
I think we will have this live by the end of the third quarter of this year. And we're targeting even sooner than that. And we've already really, at a very high level, started identifying customers we want to jointly go to. And I think the joint go-to-market strategy is going to be a real game changer for us. The other thing that's really important to note is when we turn it on, our existing, as of the end of Q1, 189 super scaled customers will all benefit that day. The speed and gestation, the model speeding up, Athena's capabilities speeding up, will all be available to every client. That's great.
All right, right there, I just wanted to quickly touch on that because that's going to produce higher return on ad spend for their current customers. So that's just going to make it way easier for them to cross-sell them more products and start growing that net revenue retention that I've been talking about. It's so very important for the company. So as this starts to roll out, they're going to get it. It's just an essential another tailwind because now all their customers they already have are now going to be spending more and more with them. Now, I was originally going to show this other one at 46 minutes, but I don't want to make the video too bloated. I do recommend if you're a Zeta long-term shareholder to come watch this video. This video is filled with such good information, good insights from the CEO. And then they also do walk through a demo with Athena on a real use case. And they also do show some numbers from an actual campaign run. And for that one, from what they're saying, that was actual information ran from a campaign and results they had. And it was showing how one of their customers, they actually did return 1,400% return on ad spend, which is great. So next thing we're going to touch on real quick, so this video isn't too long, is just valuation-wise. The valuation on this company is frankly a joke. Under $5 billion is kind of ridiculous. This company should minimum be around the $10 billion range today. You look at the forward PE, a 17.6 for a company that's flipping to profitability. So its margins are probably going to start rapidly expanding. It's growing its revenue by 50%, 28% organically. You look at the price to free cash flow at a 25. It's just it's very much a joke evaluation for this company. But I'm not complaining because I've been able to build out my position, and that's been awesome and very, very good to see. And on top of that, I got some news. So like I said, that starter position in Salesforce I actually completely cut it to actually buy more Zeta today. As you could probably tell, I'll probably have it somewhere in the thumbnail, I'm sure. But yeah, so with Salesforce, this is not to say I don't think this company can be a moneymaker. I mean, the company's so cheap right now that I think, honestly, if I were to hold it, it'd still be a very good moneymaker in the future. But truthfully, this position I was holding as just kind of a double buy. I was doing with ServiceNow. So with this company, the more I've kind of looked into it, and then something that stacked on was finding out about that Gap deal. I think Zeta is in a very good position to disrupt them, which I personally don't like. And also, I think the risk reward is better with Zeta, with it being a smaller market cap company. Again, it's under $5 billion. This company's market cap is 123. It's just math. The bigger your market cap is, the harder it's going to be to drive those higher and higher returns because you need much more substantial total growth to that actual bottom line to drive anything. And so could I see Salesforce still doing really well, going to like a 300, even 350, maybe even 400? Yes, I could, but do I see it being the potential multi-bagger opportunity I see for Zeta? No, not really. And when I'm looking at it, it was already just kind of a starter position, so I decided I was going to move my money out of that, move it into Zeta because I'm more confident in that. And then the other thing is also the more I've been doing research on Salesforce and learning more about it and learning more about ServiceNow, I think ServiceNow is a better opportunity to have in my portfolio as well, because when I look at ServiceNow, it's doing a lot more of the workflow automation on the back end for like the HRIT department, which I think is going to not only be more sticky for enterprises, but I also just think it gives my portfolio more exposure to that back end operational side. Whereas with Salesforce, they're kind of still more on that customer centric focus area, which Zeta kind of already touches around that area anyways. So I think it makes more sense to not have two positions there, especially when I'm so much more bullish on the other position. So that's my reasoning there. So let's go ahead and get to what I did today. Okay, and we're back. So as you can see, I did sell that position, and I just explained why. Again, it was a starter position, so I didn't even have it fully built. So I was just like, you know what? I think it just makes sense, especially with Zeta. The story and the thesis I had is playing out as I thought, and it's actually going better than I expected. So again, I want to allocate more there. This is something I learned when I was reading a lot of One Up on Wall Street from Peter Lynch. This is something he'd do where he'd look at a bunch of different stories and the valuation, and as a company has a story playing out better and better, he'd divert more of his capital to that. And that's what I'm seeing with Zeta, so that's what I'm doing. And also, I sold 5 shares of Crocs. This is a company I got more for a turnaround play. Most of my shares are around the $100 range, so I'm up around 20% on these shares. And truth be told, on my valuation, I still have their fair value 180 to 200 range. But this call was so bullish that afterwards, I was fine just cutting a bit of my exposure to Crocs. I still hold a decent amount of share of Crocs. I think like 35-ish, maybe 36. But I wanted to cut a bit of my exposure to Crocs, move it into Zeta, and if Crocs continues to move and starts moving closer to my fair value, I might just take more of that out. And again, either allocate some to Zeta and probably allocate more to Meta, because I still want Meta to be my core largest holding in the portfolio. And while it still is, with the stock price pulling back and with me investing so aggressively in Zeta, it's starting to get to a point where Meta's not that far ahead of Zeta in terms of position sizing. So I'd probably want to reposition that. But regardless, and then I also added about $500 of my own cash on hand. And I did that. And today, as you can see, that was 109 shares. I spent about $2,000 in a single day on this stock. And yeah, that should kind of tell you I'm kind of putting my money where my mouth is. I'll continue to be buying this week after week after week, especially while the stock price is depressed. As long as even if it's under 30, I'll still be buying. Maybe not as aggressive, but especially in these prices, I feel like I have to move on this. And to be frank, so I think the stock price, the best way I can explain it, I think the stock price won't move fast, but when it moves, it will be fast. And what I mean by that is, the stock price, maybe it bounces between 17, 23, 24. We saw it touch like the 24-ish range, 23, 24-ish a couple weeks back. Then it pulled back down. It's back in the teens, which I didn't think would happen. But I think it could continue doing this. But how long does it continue doing this little bounce between those? Could it be like 4 or 5 months from now, 6 months from now, it's still doing it, a year and a half? Maybe. But when it does finally make that breakout move, I'm telling you, the stock is going to go extremely quick, up to 30, 35, 40-ish dollar rates. Then it will probably chill out for a bit before it has its next breakout. But I don't know when exactly that is going to happen. But all I know is I see a company extremely undervalued. I see a company with a crazy moat, which I don't think that moat, I don't think people are expecting that moat. They have enough, that huge database. And obviously it's got to be valuable if Palantir is wanting to work with them. Remember, Palantir is a $250 billion market cap. They could work with any company they want in this space, and they chose Zeta. So for me, that's extremely bullish. And I'm going to continue to add to my positions in the coming weeks. And I couldn't be happier with this announcement. So please, in the comments, let me know what are your thoughts on Zeta. I also personally ran a valuation. I made a couple of videos on Zeta. I ran a valuation a couple weeks back. I also had a video where I explained my bullish thesis and a little bit on the moat they have in the business. So I'll go ahead and throw those up on screen. But please let me know your thoughts on Zeta. Are you buying any on this information? Or is there anything that concerns you with this? I'd love to hear it. Please throw it down in the comments. But we'll go ahead and end it here. We're already getting close to like almost 30 minutes. So we'll go ahead and close it out.